Once gold prices break above $1,200 an ounce, then they look overbought. Therefore, we were anticipating a pullback. Nick Calsey, the Gold and Silver Club of London. Gold touched a one-year high last week but fell nearly 3% on Monday. What was behind the drop?
Gold's had an amazing start to 2016. As you mentioned, it's gained up until last week. There's been a lot of bullish sentiment that's been driving prices, and generally that's been coming from the weakness in equities, weakness in oil, and also a lot of speculation recently that the Federal Reserve, they might actually do a U-turn on their monetary policy and actually opt for negative interest rates. Now, looking at what we've seen over the last 24 hours, gold prices have pulled back from the recent one-year highs, and that's generally been due to a risk appetite returning back to the markets. So on Monday, equity prices, they rose sharply as China's central bank, they fixed the currency at a much stronger rate. And also, we've seen oil prices jump 5% on hopes that Saudi Arabia and also Russia were going to meet to discuss the possibility of a supply cut. So money's been flowing back into the equity markets and coming out of gold.
And were you expecting this retracement?
From a technical perspective, once gold prices they broke above 1,200 an ounce, then they looked overbought. So here at the Gold and Silver Club, we were anticipating a pullback. And after such a strong month anyway, profit taking was inevitable. Traders have generally been waiting for China to return back to the markets after their week's absence for the Chinese New Year and really see how they would react. And since China's come back, there's been very little buying activity from China. Instead, there's been profit taking, and traders just really rebalancing their portfolios in favor of bullish bets for equities.
What is your outlook for gold over the next 1 to 3 months? Could it slump back to $1,100 an ounce?
I don't really think gold will get as low as $1,100 unless the Federal Reserve, they go ahead with their original plans to raise interest rates 3 or 4 times this year. However, there's still a lot of uncertainty in the markets and just generally uncertainty over the health of the global economy. So I don't think that's going to go away anytime soon. And gold is really starting to do something which it hasn't done for a long time, and that's to perform like a safe haven once again. So as long as there's still uncertainty and almost a sense of nervousness in the markets, then I don't really think gold is going to be dropping to those kind of levels. I think generally if prices do come down, if there is some calm back in the markets and equities that become attractive again, then prices they may come down towards 1150 on the low side. But generally I think if the situation worsens, if we start to see a sell-off in equities, more uncertainty coming out of China, even the US, or even if the Fed they pursue negative interest rates, then I definitely think there's a lot more upside to gold. We could even see prices break above recent highs and even maybe touch 1,300.
Taking a look at silver, it slipped 2.7% to $1,528 an ounce. Was it similar factors weighing on silver this week? And what is your short-term outlook for the metal?
Absolutely. In terms of silver, it's correlated to gold. So when gold falls, you're going to find silver prices will fall as well. So it's been the same fundamental factors that have been having a negative impact on silver prices. I think silver prices, they're currently trading around $15 an ounce. Potentially they could come as low as 14 to maybe 13.50 an ounce on the low side. That's if gold prices they continue to fall. But if we do see a rally in gold in the short term, then there will be further upside to silver. So we could see silver prices break back above $15 an ounce towards $15.50 an ounce.
Nick, great talking to you today. Thank you. Well, that is all from me for the moment. Goodbye for now.